Hi, and welcome to another edition. What is happening with the price of Bitcoin here? We just saw this nice little dump to the downside, grabbing some nice juicy liquidity at the bottom. Are we going down lower? Are we going to move and correct up? Perhaps V-shaped recovery? Let's analyze the situation here together, go through a couple of scenarios, and as per my YouTube video update last night or yesterday, I did say we're not out of the danger zone yet. And there's some key things we need to look at in order for bullish momentum to the upside. So let's analyze the situation and see what is happening. Also looking at ETH losing its home trend, perhaps a retest of this. Zilliqa still within its home trend. Can it hold for continuation to the upside? So Zilliqa still looking a little bit strong. What caused this dump? There's lots of tweets on Twitter, and the one thing that I did find is, before we dive in, please like and subscribe. It's your way to show love towards the channel. If you'd love to trade with me, my two affiliate links down in the description. Costs you nothing, and it shows tremendous support towards the channel. So let's analyze the situation here together. Just to say, what I found on Twitter is a company called Matrixport latest report released a rare view that the SEC or the SEC will reject all Bitcoin spot ETFs in January. Hence the candle down, and final approval may only be achieved in Q2, which is Q2, April, May, June. Okay, quarter has almost 3 months, 3, 6, 8, 12. Yeah, 4 quarters in a year. So for January, February, and March, they are speculating that the ETFs will not get approved in Q1, only in Q2. And we don't know. We have to wait until next week, from the 8th until the 10th, when the ETF news comes out, to finally see, will that news be true? Will the ETFs be approved, or will it be delayed? Okay. I think from a psychology perspective, we also have to keep in mind that when a massive BlackRock company, for example, launches an ETF into the market, do they really want their customers to buy it at all-time high or yearly high prices? Or would they want to manipulate the price a little bit down for people to buy at better, lower prices, so that everyone can benefit from this potential bull market that's on the horizon? And I think the halving taking place in April, which is in alignment with Q2. So it just makes one think, and let's not speculate more than what we should. But this is an analyst from Matrixport that's speculating that the Bitcoin ETFs might not get approved in Q1. So not confirmed as yet. And I do feel that if this news was confirmed and maybe a leak somewhere, this correction could have gone down a little bit further than it has. Okay. So let's jump into the price of Bitcoin and analyze the situation to say that, well, the first scenario that I did look at when we started seeing this correction to the downside is scenario number 2 that I have over here. And I'm not sure if I covered this in my YouTube update yesterday, but scenario number 2, from an Elliott wave perspective, says that if you go onto the 8-hour and this momentum here, from the 11th of September, we made 1, 2, 3 moves to the upside. Okay, also third wave, 1, 2, 3, 4, 5 waves inside of it. And we are waiting, we've been waiting for this corrective structure to finish so that we can go and complete the 5th wave to the upside. Which is not really bullish either, if you ask me, in my personal opinion, is to say that, well, even if 4 was over here before we had the dump and we're going to go and make a 5th wave correction, you're still looking for a deeper correction to the downside. But it kind of makes sense that before you launch a Bitcoin ETF, and I'm just purely speculating here, that you would want to drive price a little bit down for your customers to benefit from the price of Bitcoin for potential nice little move up. Anyways, let's analyze, not speculate, and see, well, what happened here is to say that, well, now we had this little nice wick to the downside, which tells me that this scenario is now in play to say that, well, we could have finished the 4th wave here, which is also the C wave to the downside. So zooming into the structure, you will see that I had it as a 3 wave A, 1, 2, 3, 3 wave B, 1, 2, 3, and now potentially a 3 wave to the downside, 1, 2, 3, and the C wave can also be, well, is a 5-wave structure to the downside, which tells me this could potentially only be the 3rd wave inside of the 5th wave. So potentially we will still take this low. Only time will tell. But when you take a fib from the top of 3 to the bottom of where we've completed A to the top of B to work out your C targets, you will see that your 1.236 is a common C wave target, which we've hit to perfection and getting a retracement back to the upside. Okay, so we have to acknowledge that based on where price ended right now, we could see a V-shaped recovery to go and complete the 5th wave. Okay, but we could also go and move down further to the 1.618 and even the 2.618 here, which is in confluence with this trend that I've been tracking to the upside. So zooming out, Elliott wave rules state that when you take a normal fib from the bottom of 2 to the top of 3, potential 3, okay, you drag it across, and let's just take this one out the way so we can clean it up nicely and take the scribble out the way as well. Okay, is to say that for a 4th wave to remain valid, okay, you don't really want to see it come down to the 618. 4th wave generally likes the 236, the 382 and the 50% fib level. So this C wave to the downside can still extend. Okay, we just have to keep that in mind, but it can also reverse from where it is now because it did hit a common C wave target. So it's no guarantees. We can't predict the market exactly how it's going to happen, but it does kind of make sense that institutions wants to push the price down a little bit lower. And what could also happen now is that we have this 4th wave potentially completed, for now impulsive waves to the upside, or we could still see some more momentum down, of which where I've got this green block over here, okay, from where we are right now to the 50% level is a potential turning point to go and complete the 5th wave. So we could still see momentum to the downside. Okay, now let's zoom into this little structure over here. Let's go into the 1 hour, take the fib out the way, close the scenario. Okay, let's clean up the chart. What happened over here? In this scenario, when we broke this trend to the upside, bullish momentum, social media going crazy, going to all-time highs, we're going to tap that yearly level, we're going to $50,000. Okay, what I told, and I will leave a link in the description for our community downstairs in the description, is we've analyzed the situation together where we said that in order for bullish momentum to remain to the upside, so if you want to count this as a 1, 2, 3, 4, 5 to the upside, there's specific rules that you need to apply. So from number 2 to the top of 3, you don't want to see us hit the 618. Okay, which we obviously did. It was then also stated that from the rules of Elliott wave perspective, when you are busy with a 4th wave, generally you want the 236, 382 and 50% maximum target for a 4th wave. Okay, and you want to apply good risk management, anticipating the 5th wave to the upside. Okay, if this is not a 5-wave structure but a 3-wave structure, 1, 2, 3 to the upside, you can now have a 3-wave structure to the downside. 1, 2, 3, where we've now hit or created that C wave to the downside, with your invalidation being the 618. Okay, so we love good risk management, and what I did is I created a small little swing position here at the 382. At the 50%, I added a little bit to my position, and my stop loss was just here below the 618. Okay, and obviously we had to move down, and thank goodness for stop losses. That's how we protect ourselves. Okay, the anticipation was for this 5th move to the upside to even go and claim that yearly level. Okay, I think I do have it here, to come and claim this yearly level, and there was some nice liquidity lying above here as well. If you go into the liquidity heat map, you'll see between 46,000 to 46,500 nice beautiful liquidity lying over here. We didn't tap it. We also created bearish CVD, and finally now finding the momentum to the downside. Okay, I hope this makes sense. These are basically the scenarios. So what can happen from here is, let's reverse the scenario, take all of those out the way, Elliot out the way, and say that, well, okay, now we are building 5 waves to the downside. 1, 2, 3, 4, 5. Okay. So this wave is potentially still not complete, although we could make a 3-wave structure or a 5-wave structure. So ideally you would want to say, well, if for this to have another leg to the downside from 2 to 3, you don't want to see us hit the 618. Okay, so from where we are right now, even the 50% fib level is still perfectly fine for this momentum to continue. 50% to still come and make a 5th wave, for then only potentially a correction to the upside and impulses to the upside to then maybe go and complete that ultimate 5th wave. Not much else. I think looking at the altcoins, ETH lost trend, but going on to the daily, we can still see that this red trend that I've been tracking to the downside, we broke out, and this could potentially just be a retest. Okay, little retest. I'll be keeping an eye on this area over there for then continuation to the upside. If we're going to come back below this trend, it could mean that we are going to see lower levels, potentially even coming back to this green trend that I've been tracking for the momentum to the upside before we see that breakout, and also a deeper correction for Bitcoin. I was also just looking at the ETH to BTC, the chart still looking strong over here, as I highlighted in my YouTube update yesterday. It's still holding the level, it's still holding the strength. We had a little wick down, but ETH is still showing strength relative to Bitcoin. What else? I think that is it. Just a quick little short update from my side. I hope you're all having a super fantastic day. I hope you didn't get wrecked. Always, as usual, as traders, we don't always get it right. It is good risk management that keeps us in the game, and it's a game of probabilities. The one thing, I'm not sure if I do have that here. I wanted to show CVD, but perhaps I'll give you an update in my next video, where you will see between these two pivots also nice little bearish CVD building, of which the target was this low, and we came crashing down, hitting the 618. And when we hit the 618, I knew, okay, we're either going to get a retest of the scene of the crime, support turning into resistance, and then further continuation to the downside. And then what happened is we just got a 1, 2, 3, nice little move to the downside. So now we just have to observe how is price going to form here, and if we do recover and we hit the 618, like I've just mentioned over here, taken from this pivot to the low that we've created, probabilities then increase for us to go and make higher prices. But it's all a game of probabilities. Nothing is guaranteed. Please trade with good risk management. Until the next update, cheers for now.